welcome to a new video. I'm Kunal and I'm making this video for all the traders who are learning and want to actually hear from somebody who's not going to bullshit you and tell you the truth. Look, I blowed up accounts, lost sleep, and really even questioned whether I was cut out for this. But 20 years later, I traded every single market you can imagine, taught over 7,000 traders, and built a strategy from the ground up that made me millions. And today we'll see 40 hard-earned lessons that actually make money that have been forged in real markets under real pressure. If you're stuck, overwhelmed, or just one breakthrough away, this is a video that may change everything. I've broken this into 5 key phrases that every trader goes through: mindset, setup, execution, management, and mastery. So whether you're new or experienced, this will meet you exactly where you've been stuck.
Guys, let's talk a little bit about mindset. It's important to be able to trade with a plan. So I have a rule that I always tell my students: if it ain't tight, it ain't right. So what the heck does that actually mean? It means that if you're doing a breakout setup, right? You're doing a flat top breakout or a flag breakout, you want the pattern to actually be tight, meaning your 9 EMA should be curling like really right up under the breakout. So if you look at like any big breakout throughout history, SMCI when it broke out, NVIDIA when it broke out, or Tesla when it broke out, what do you notice when it broke out? The 9 EMA was right up under the kitchen. It was so tight. What you will find is breakouts where the 9 EMA is too loose. Like if you can like literally fit your thumb between price and 9 EMA on your laptop or your desktop, that means that the price is too loose. That breakout is going to fail 99% of the time. Don't marry your stocks, just date them. So look, these stocks are just tickers. They mean nothing. Literally, they mean nothing. Tesla, this, NVIDIA, none of it matters. Some of my best trades in the world that I've ever taken throughout my history, I'm like, damn, like, man, I didn't realize biotech stocks were so hot. And then somebody be like, that's an oil stock, amigo, right? And you don't even know. It does not actually matter. Do not marry the stock. Sometimes we fall in love with stocks. I had a student of mine, no joke, lose $2 million on Tesla. Why? He loved Elon Musk. He's like, Elon Musk is going to save the world. We need these car batteries, all of this kind of stuff. He loved Elon, and so he just rode down with the ship on Tesla just because he loved the stock. And you don't need to really do that, right? It's about tickers. They're just tickers. Date them, don't marry them. Cut losers fast. Guys, this is just a no-brainer. Doesn't need any explanation. Guys, there are stop losses and then there's time stops. If I'm in a stock and it's dead, I usually cut it. Why? Dead money is no money. There's an opportunity cost. If you've got limited funds, $50,000, $20,000, and you're just sitting there stuck in some dead stock for days, while the rest of the market is ripping, even though you haven't hit your stop loss, you're losing opportunity cost. So I cut the losers fast. I get into something better. It's better to be efficient than to sit there and just wait. Let winners run. This is the hardest thing to do in trading, especially for us Indians. Look, we're cheap bastards, right? We see $1, we gotta take it, right? We see 50 cents, we gotta take it. So letting winners run is really, really tough psychologically for me, and probably genetically, if we're being honest, right? You guys know, us Indians, we're cheap bastards. So you gotta let your winners run. How? You've gotta have some system for doing it. For me, I like to use my moving averages, and I use higher highs, higher lows, and a handful of things to allow myself to stay into the trade. And then I use a scaling out strategy, meaning I always take some of my trade off pretty quickly when I get 2-to-1 reward to risk, or just I get like a big candle. Why? It allows me to take some income. It allows me to relax a little bit. Then I can use a trailing stop along my EMAs and higher highs and higher lows and kind of combine those into something so I can let those winners run. Let's talk about the difference between failed breakouts and real breakouts. 3 taps are for winners, 2 taps are for losers, my friends. If you have a breakout throughout the history of the man, every breakout, you got 3 tests or more. Guess what? 2 tests of resistance, not a breakout. It's a double top. How resistance works is you have a level of supply at a level, and you got to soak that shit up. So what happens is every time you test it, you soak up that supply. So if you just test it twice, the supply hasn't been soaked. You need 3 or more to get a powerful breakout. So 3 tests are for wieners, Two tests are for losers. Now look, this is the most underrated thing and maybe one of the most important. Trade stocks in play. Guys, just because you draw some squiggly line on a chart doesn't mean you're going to make big bucks, right? The best trades you ever take, they have some piece of news, and then you have the technicals to confirm it. I have seen this over and over. Guys, if you just have a trend line break, you might make 1%, 2% on a stock. If you have some piece of news out and then you have the technicals on it, then you're going to make big bucks. We took a trade at SBET a couple days ago. It had a piece of news on. Now look, this stock is a big gelatinous piece of smelly crap. But when this stock had a breakout level sitting there around 40, sitting there in the 40s, right? And it just been testing the level intraday. When it finally broke over it, boom, it shot to 48, 49. And I was pretty pumped. I'm like, wow, that really went up a lot. And it was like just up 4 points, right? Dude, the next candle, you're up 2 more points. By the end of the day, it was at $100 dang. Why? It had a news piece out, and then I applied the previous rule, which is 3 taps are for winners, 2 taps are for losers. So you're applying technicals and fundamentals at the same time. Now look, you got to align with market stages. The boom and bust cycle is huge. I've seen crypto millionaires become crypto whores selling their bodies for $5 to pay their rent because they didn't pay attention to the market cycle. This happens every time. You write some meme coin and it goes through the roof. And then the cycle changes and all of the sudden you lose all your money. You have to align the plays with your cycle. The same thing happens in mid caps, small caps, large caps in the stock market. If you look at the QQQ in January, February when it topped out, look what happened to the momentum stocks. Oklo is at almost $60, goes to $15. RKLB, crash. Oklo, crash. SMR, crash. IONQ, $50, crash. Every single stock that was really, really hot, when you had a speculation cycle, all of a sudden when the cycle changes, they die. Not only do they die 70%, 80%, and they do it fast. Now look what happens. The cycle changed again. IONQ, Oklo, SMR. What happened in the last few short weeks? They doubled and tripled because the cycle changed. You want to align your trades with the market cycle. Now let's go into the next phase. This is all about setups, all right? Which is one of the most important things in this trading game. No setup, no trade. That's always the rule. So next lesson, you gotta respect the risk. Are you in this game to YOLO something and make money tomorrow? Are you actually doing this so you can be in the game for the next 10, 20, 30 years? If you're in this to be into the next 20, 30 years, you gotta respect risk and think about risk before the money because you wanna be able to stay in the game. Next, you wanna use hard stops, not mental stops, right? Look, the old adage, like people didn't wanna use stops because the market makers will take your trades. Guys, the market maker's not coming for your $5,000 position. The market maker's not coming for your 50 shares of Tesla or your sim-funded futures contract. There is no market maker for this kind of stuff. Nobody's going to move the market for your stop loss. When you put the stop loss in, it takes the thinking out of it. You don't have to sit there and stress like, oh my God, should I stop out or not stop out? You're already in the game. You can just let your trade play out. I have lost so much money in my career from just using mental stops. It sucks, right? Like you can trick yourself all the time, but as soon as it goes back under your mental level, you're facing this battle. Should I sell, not sell? And then you're like, let me hold it on for 1 more minute. Let me hold it on for 50 more seconds. And then next thing you know, you've lost so much more than what your mental stop was. Next, master the flags and ORB setups. Guys, these are the 2 easiest setups you can learn. They're clean, they're precise, and they have clean levels. What I mean is that when you're trading, you want to look for inflection points, lines in the sand where you say, hey, this trade is good, this trade is bad. I love looking for inflection points, areas that are so important that you know if it hits it, something should do something, right? That is huge. And so ORBs and flag patterns are fantastic because they have clearly defined levels where if it hits it, something should happen. And if something doesn't happen, then you have a clear understanding of what to do next, which is, get out of the trade. Next, look, you got to avoid overtrading. We all overtrade, we get a little bit bored, and we start jamming buttons. We want to make money, we want to have a little fun. You're going to have to find yourself some hobbies, and you're going to have to do something to prevent overtrading. So look, what are some common ways to stop overtrading? I always call out the pattern before I take the trade. No pattern, no trade. Look, now, you want to keep some records and review them. I use TradeZilla to keep my journal. You can use Evernote, you can use Google Documents. We used to use freaking Excel back in the day, right? I mean, it's all there. You don't have to do anything crazy, but you should have some type of journal and some ability to connect some data so that you can review it. You don't got to get so in deep in it. Like people are overdoing it now, but you do want to have some way to look back at your trades. Now look, understanding risk to reward. This is huge. Almost every trader I know will sell something when it's just a little bit green, but they'll hold the bag when it goes a little bit down. So you want to be able to make sure you can reverse that. Most people don't understand the math. If your reward to risk ratios are skewed, your win ratio has to be so high that you can never be profitable. So you gotta handle that. Like if you're sitting there and you're like, I got $1 stop, you cannot sell your trade if you make 20 cents on it because it feels good, because it's green. That's not gonna get you where you need to go. And long term, you're gonna bleed out your account. Now look, this is important. You gotta learn how to trade the first hour. Guys, you haven't worked so hard to work so damn hard. If you're sitting there grinding your balls off till the end of the day, you're overdoing it. The real action's in the first hour. There's 3 hot patterns I teach in my 60-day boot camp where I've literally trained over 7,000 traders, some of the best traders in the industry. I am literally the guru to most of the big traders you see on YouTube. Go look at gap and go pattern. That's just a steal of my ORB pattern. Go look at the first pullback setup. That is just a steal of my quick pullback setup. I was the inventor of many of these. Thousands of students and the best traders in the world come through this industry, and they all know one thing. You got to trade that first hour. That's where the action is. That's where the volatility is. The rest of the day is dead most of the year. It doesn't mean you can't make money. There are months where the action is good end of day, but the first hour is where the real flavor is at. That's where the action's at, and that's what we got to focus on. If this is hitting home and you want a little bit more structure, we put together a free trading course that walks you through the exact structure on how to go through every single phase that a new trader will go through when they get started and what to do next. We also cover how to analyze the market, how to time your entries, and manage your risk. And I'm going to give you a few of my key favorite trading setups that I've used to literally make millions in the stock market for free. And when you sign up for that, you're gonna get access to my free Discord community where I'm gonna trade live in front of you guys 4 times a week, no charge. Just hit the first link in the description to join. Phase 3, the execution. Guys, this is where the real money's made. It's not in just like, hey, doing some woosah meditation bullshit or drawing squiggly lines in your charts. The money is made in the execution. First thing that's the most important, don't chase extended moves. Guys, if the price is too far from the 9 EMA, if you're too far over your breakout level, the stock is extended. If you buy it, it's probably gonna pull back and retrace. You're gonna get stopped out. My biggest losses always come from chasing stocks that are too far from their EMAs. Now look, you gotta know your strengths and weaknesses. That's where the data comes in. We were just talking about this 2 points ago. Some people are breakout traders. Some people are pullback traders. Some people are mean reversion traders. I teach it all. In different markets, I do different things. But you gotta know where your strengths are, right? And so you gotta play to it. Stay away from the things that, even though you like them, you stink at them. Focus on what you're good at. Are you in this to have fun? Or are you in this to make money? If you're in this to make money, you stick with your strengths, even though it's boring. Trading should be boring. I want you, my friend, to be boringtrader.com. That's where you're gonna make your money. Now look, let's talk about earnings season. Earnings season means opportunity. The biggest setups come from earnings season. When Tesla went on its epic run from $10, $20 to thousands of dollars is because there was a catalyst, earnings. Palantir, when it was sitting there at $6 a couple years ago, and it went on the monster run, it was because of earnings. Recently, we've been trading this AVGO. Look at the chart on this bad boy. Why is it going up right now? Earnings. Earnings is the driver of stocks long term. Short term, it's about news, it's about sentiment, it's about rumors. Long term, it's about earnings. Now look, we want to remember that the chart always tells a story. We don't ignore the chart. Whether we like a company, we like the CEO, we like the product, the chart tells a story. That's what we govern our behavior by. Now, look, next one. I want you to protect your mental capital. If you're getting into trades that stress you out, your mental capital gets depleted. You're going to make mistakes. Your mental capital is as important as your physical capital. While you're going through all this, I want you to review daily, weekly, and monthly. Daily, you got to just do your journal. Weekly, you got to review your P&L and the setups that are working and game plan in the future. And then on your monthly basis, you're looking at your numbers as an aggregate so that you can plan for this next year. Where are you realistically? Where can you go? And what do you need to do? Next, look, you gotta let the patterns come to you. So many times when you get a hot stock, you wanna just get in, you'll invent patterns. I do it all the time. The pattern will come. It'll form at one point. A hot stock might give you 5 setups during that day. You never have to force the issue. If you do, you're gonna lose anyways. Let the pattern come to you. You're gonna get probably 4 or 5 opportunities that day. You just gotta wait it out. What are you waiting? Like an hour, 30 minutes? It's not gonna kill you, and you're gonna get a much better setup with a lot better RR. Now look, volume confirms the move. Guys, you don't buy because of volume. That's in the trading books. That's on the YouTube videos. That's a sucker's game. Guys, think about this. If you buy because there's volume, you're literally the last man to the gangbang. You're coming in after everybody already bought. Think about it. If you looked at a damn stock and somebody's like, there's $500 million shares in volume, and you bought it, you're the last man to the gangbang. Everybody's already in. So you think that's the breakout? That's not the breakout. The breakout was way before. You don't want to be the last man unless you got out of prison or something weird happened like that, right? Look, we all got to do what we got to do, right? A 20 is a 20. But remember this, you can be first, you can be second, but you never want to be last. Once you're in a trade, what you do next makes all the difference. Now let's go into phase 4, management. Pyramiding. That's a big topic in the trading world. It works if you do it carefully. When people talk about pyramiding, it's adding to your position. You don't want to add to your losers, but you want to add to your winners. The problem is most people do it wrong. You add to your winners, you screw up your average. It goes down one candle, you're at a loss. When you pyramid an ad, each ad is its own setup. Hey, I took this flag breakout and it went up. Now it's pulling back to a moving average. I'm adding it. It's a separate position, even though it's the same stock. And so you're going to manage your risk according to that one. That's the proper way to pyramid. If you're just adding, you're going to ruin your average. It goes down a little bit. You're going to get... Now look, cash is a position. At times you got to look and say at cash is a position. The market is not favorable to what I personally do. It might be favorable to what other people are doing, but it doesn't fit my setup. I'm going to sit around for a day or two, get a gauge of what's happening, reassess, and then re-enter. Diversify, but don't dilute. You got to spread some of your risk. You can't be all in on one trade. I've done it before. It very rarely works. Throughout history of man, you'll see people that are like super famous and they were all in on one thing. Those people are 1 in a billion. They're not out there. You got to spread your risk around a few things, but you don't want to get crazy and have like 15, 20 positions. So diversify, but don't dilute. Now, while you're doing all this, remember, adapt to market conditions. Certain market conditions say you can have more positions. If you're in a run-up phase of the market, you can have 4 or 5 positions going because the market is so hot. When the market is choppy or it's running down, you really only need to be in 1 or 2. And so you got to adapt it to what's happening in terms of the market conditions. Guys, don't copy, learn. It's awesome to see all these traders making money. Social media has made it so that like you can see these traders and it gives you these goals and all these strategies, but don't copy them. Learn from them. Take something from it, but be unique to your style. Every great trader I've ever met has a unique look to the markets, and you have to have yours. News moves the markets. What's happening right now? You see the Twitter fight between Trump and Elon? They're going at it like two cats, two naked old cats, right? Just going at it. And it's moving the markets. So what did we do today in the chat room? We shorted Tesla. Elon started coming out and saying, screw Trump. He's a liar. He's on the Epstein list, all of this kind of stuff. We shorted Tesla. Why? Because the news moves the market. Even though Elon's calling out Trump, that's not good for the Tesla stock. So we got to take a short on it. You got to always be aware of the news. I use a couple things like Benzinga or Trade Exchange to get my news, but really it's just keeping your ears open. We have a chat room full of hundreds of traders that all are doing this professionally. So we're all posting news and sharing it with each other. So my chat room is like the best way to filter out what's really real in the markets. It's the best day trading chat room in the world. Now, while all this is happening, watch your position sizing. If you go too small in the hottest setup, you lose. Even though the trade wins, you need it to be bigger. It's costing you money in the long run. If you oversize on a shitty setup, you're going to lose in the long run. You got to size your positions according to risk, but also in terms of the probability of the setup. That's going to be very huge. This thing has kept me in the game for so many years. It's having a daily prep routine. Guys, I'm not the most gifted trader. I'm not even the best trader, but I'm here after all these years, 20 freaking years. Why? I've got a daily prep routine that I never break. You know, I'm hustling in the morning, preparing. I'm teaching class at night. I don't break protocol no matter what, and it's kept me in the game day after day for all these years. Now let's talk about the deeper stuff. The things that keep traders in the game for life. We gotta respect overnight risk. In the wrong market cycle, if you're holding stocks overnight, you're gonna get smoked out. Look at earlier in 2025, when Trump hit everybody with the tariffs. If you were sitting there holding stocks overnight, you were getting caught in gap downs. Your stocks were literally opening down every single day. I had a buddy of mine, a business partner, that literally had made $1 million in the beginning of the year and gave the whole thing back. Why? He kept holding overnight, hoping for a bounce that never came. So you gotta respect your overnight risk. If you don't, you're going to get foobarred. Focus on liquid stocks, guys. This is one of the easiest ways to stay out of trouble. You get too low float, too low volume, you're gonna get in trouble. You get liquidity, and I think liquidity is anything with 5 million shares or more. Preferably, I'd like 10. You're gonna be in liquid names. You're not gonna have any slippage on your trades. It's just less stress, but you can still have the same returns. Now look, you're only as good as your emotions. If you're angry that day, you're gonna lose. I lost $7,000 yesterday, and I couldn't manage my emotions. I hit my max loss in like 42 minutes. If you can't master your emotions, you're so screwed. Backtest and forward test. Backtesting is obvious, right? Hey, let's look in the back and see if this pattern has worked before, the situation has worked before. But you got to forward test too. As the market conditions change, hey, will this pattern survive in the future based on what's happening right now? You're seeing currently in 2025, what? A lot of algo moves, a lot of buying programs, a lot of AI moves too. You can see like the fake outs, the big candles that come out of nowhere. People are always talking about back testing, but you need to forward test too. Back testing, sure, every software has it. But with today, AIs, algos, the market has changed in 2025 a lot. You need to forward test to see if the things that you're doing will actually work in the future. With AI and these big buy programs, everything is changing. The candles are getting bigger. Look at the QQQ today for June 4th. Look at how big the range is. Up, down, up, down. Things were getting crazy. There was no explanation, no news for some of it. It's just algos gone wild. You need to forward test your things so they can handle this kind of action. Guys, there are no home runs needed. You can scalp your way to wherever you need to go. Stacking $1,000 days, stacking $500 days, and building on it. There are very few traders that just look for that unicorn and they make that one trade that changes their life. How you change your life is by stacking days after day. Good decision after good decision. That's when you're going to get where you need to go. You don't need to do home runs. You can take 1, 2, 3, 4, 5% at a time and just keep stacking them 5, 10, 15 times a day, and then do it every day of the month. While you're doing that, you need to continuously level up. Up your strategy, up your game, up your mindset. your physical and mental performance. Now look guys, this is the most important thing that you're ever gonna learn about trading. You're not trading charts, you're not trading indicators, you're trading your hopes and dreams. Everybody has the same goals in life. We want to take care of our family, we want to buy cool stuff, we want to look good at our class reunion, we want to shame all the people that didn't believe in us on Facebook with our cool vacation pictures. That's just life, right? We all have the same inane things that we want to do. So we're trading those hopes. We're not really trading charts. But if you can narrow it back down into charts and get rid of all that stuff, you're gonna make it, because charts themselves are easy. But when you're trading your hopes and dreams, you make trading so complicated. But it doesn't have to be. These charts, these patterns that I teach, I like to take credit for them. But look, I wasn't the sole inventor of every single one. We take from the generations before and we make it our own. And trading does not have to be complicated. They're all the same stuff. We're all looking at the same stuff. But what happens is some people put their hopes and dreams in front of the charts. We trade price and that's it. And that's how we got to go and attack the markets. If even one of these lessons hit home and you're ready for more, here's the next step. We created a free trading course that breaks down my exact strategy into detail, from entries and exits to how to analyze the markets, along with how to get your risk under control so that you can trade in a 360-degree manner that is profitable and concise. In this course, you'll learn how to spot the exact phase that you're in, analyze any market with confidence, time your entries and exits like a pro, and manage your risk like a true professional, somebody that's gonna be in the game day in and day out. We even included some bonus modules on how to build a trading routine, how to work on that trading psychology, and how to structure proper routines that will prime you for immense success. You also get access to a free Discord community where I trade live 4 times a week, where I hop on and show people my entries, exits, and game plan, and literally show you how to make money. I put my money where my mouth is day in and day out. My resume is in real time. You see exactly what I'm doing in this community, and that's the best way to learn. There's no catch, just decades of experience that I'm giving to you for free.